All right, so there we go, everybody. We will be backtesting on TradeLens this time, and surprisingly, finally, we can trade on TradeLens. It is going to be absolutely crazy, man, because we have some really cool stuff and features that I want to showcase to you, while also just educating you about my new model. Now, we're not going to be including spread and commissions. I personally just like to add that afterwards, after basically I've collected all of the data, and then just basically subtract that with whatever we have made. So we're going to go for Euro USD, keep it very simple, and let's just go. And we're going to be backtesting the 1st April. So there we go. So let's skip to our usual time that we like to trade in, which is going to be 8 a.m. So what do we have in the making right now? When we're looking at this entire price action, what could I basically base off this from? Now, if you have watched the previous videos, then you know that I like to go for imbalances. Why? Because every single imbalance likes to get rebalanced. It might take some time, but usually we always like to do that. Now, given that we know, okay, we like to trade into imbalances, well then let us check this out. As you can see, we have an imbalance in here. Okay, let me remove the outline. There we go. Our very first imbalance is going to be this entire BPR, right? No, and this is a recurring mistake. When you're seeing this, your very first thought will be, okay, let me just trade this onto the downside into this entire BPR, and then this is going to be it. Now, this is a mistake because this entire BPR has happened before 8 a.m. You see, if you're looking at the bottom right now, we're at 8 a.m. It has been created before that. Sometimes we can also take it, but in this case, no. The reason for that is because we expect higher movement, because overall, well, we are just trading higher. Now, from this point on, right now, I don't really have something to look out for. So this candle has been created. So it is going to create an FEG. From that point on, we could be potentially basically shorting this. Also looking out for this candle. And no, this is not support and resistance or break and retest. This is different from that. But it is still not enough, right? We need a BPR to fall back into. So let me just see. No, not creating. Okay, there we have created our entire BPR. So let me just move this entire thing all the way in here. And as you can see, we have created one. If you're going to look at it this way, this entire BPR is stronger than this BPR. If you're going to just measure it from an imbalance perspective. Why? Because in this one, you're going to be having basically FEG number 1, FEG number 2, and FEG number 3. The more BPRs you're going to stack on top of each other, the more likely it becomes, okay, price is going to fall back into that. However, we have to stick to the rules. That's exactly why we have these rules to begin with. In that case, we don't really like to trade into that one, but instead we like to trade higher. Why? Once again, because it has been created after the 8 a.m. candle. So from that point on, we want to target it and we want to go for 0.5 pursuit. I think you can barely see it. I have to increase my entire scale, man. So we're just going to be taking the trade as it is. Let me quickly move the shortcut to the trade panel. There we go. It's going to be Q for me. Let's drag it in here. Select that and it's going to automatically do all of that stuff for us. So the lot size is going to determine how much we want to risk. Now, on this specific trade, I'm just going to go for 1%. Previously, we have been going for, basically 3%, 4%, even on prop firms, right? In this one, you don't even need to do that. So let's just take a buy market order. And let's see how this goes. Okay, this was a take profit. Let me remove all of that. That's pretty much our first trade for that one. Let's remove it and just go to the next day. Now, you could basically take another trade, and I'm just seeing this out of a lot of different backtesting experience. You could just trade this onto the downside. Why? Because you're just basically ping-ponging it at this point. We have created what? Another imbalance, and not just any imbalance, but a BPR. So from here on, you could be trading this onto the downside one more time, right? But you have to understand the nuances. Look, you would have taken a loss right there. This is such a common trap, and I love that we're having this entire example in this backtesting session. So please just keep in mind and follow the rules that I'm giving you. So from this point on, we're just going to be skipping on to the next day. All right, there we go. So we're at 7:45. The next candle is going to be the 8 a.m. candle as usual. Now, what I can spot right from the start is we like to go onto the downside. However, this is what pretty much everybody that is going to look at the price action, they be just thinking, okay, we are trading lower, we're making lower lows, lower highs. Okay, we must just continue lower. But this is the exact problem. You like to basically take the reversals. We're focusing on reversals. Yes, we're not taking the continuation. And it's also not about catching falling knife, because we just want to get a broad overview of, do we have an imbalance? Yes, we do. So that's one thing that we like to look out for. However, I don't really trust it, right? Because we could just might as well continue on to the downside lower and lower. So I need to see an imbalance created very, very frequently, right? However, once again, why did I even bring this up? Because I want you to have a different mindset to this model. Treat it like a different thing entirely, okay? There's going to be some similarities, but just treat it like its very own thing. So from this point on, we're basically just looking out for an imbalance that has been recently created somewhere in here. All of that, yes, we like to consider it, but it doesn't really matter. So Let's quickly see, can we get an imbalance like that? I mean, we're creating relative equal highs in here. I can give you that. But aside from that, we're not really having something. Okay, we're creating an FEG here. We could be doing something now. If we are just going to trade higher, let's see if that's going to happen. We also have this entire FEG that we could be trading into. Let's see if we're going to have like strong movement onto the upside, then perhaps I'm willing to also take it onto the upside. Because see it this way, imbalances are not just FEGs in that sense. Imbalances is everything where liquidity is residing in. So this is also just going to be relative equal highs in that sense. Okay, so let's see. We're just, okay, this candle heavily onto the upside. Depending on what is going to happen now, right? Because I don't know if it's going to basically create another candle in here that is going to look like this. And then we are creating an BPR. It could be creating an entire candle like so. And then we have a BPR. However, if you have watched the entire video, that is not the usual kind of BPR that we like to go for, okay? So we basically have two options if that candle is going to be created. We basically either take it onto the upside right now, shoot for these relative equal highs right here, or we're just going to be basically trading it onto the downside. I would pretty much just preferably trade it onto the upside, but let's just see what is going to happen. Because you also just have to keep in mind when you're doing this live, you don't have that much time. You gotta be quick with it. And so I'm just going to take the first thing that comes to mind. So there we go. I've selected the trade. We want to go for a 1% risk, buy market order. Let's see how this goes. Okay, so actually we have, no, never mind. We have not created a BPR in here, but you know, it would preferably be something that I would like to see. So we have traded back into this entire FEG. Okay, so this is basically the first indication because we have traded into this entire FEG. Now could be the time that we trade higher, right? We're also creating even more internal liquidity because you see, all of these concepts, they just keep on aligning and aligning with each other. Once you have identified the right direction, which I hope it is going to be the right direction, it will be a kind of messed up. If not, then you're just basically stacking on top of each other all of the confluences, okay? So let's just see how this is going to go. Okay, we have basically retested that entire FEG one more time. Okay, and that's a straight take profit, man. So I would have actually expected a little bit of more consolidation, maybe even retesting this one more time, trade into it, take out liquidity, and then from that point on higher. So the big movement was expected, but not in that timing in that sense. But anyways, a take profit is a take profit. That's all that matters. So there we go. I mean, potentially we could even take another trade as I'm seeing right now. Let me actually drag this out. Yes, we could actually be taking another trade onto the downside. Well, but just keep in mind, this is more of a riskier trade. I'm not even going to go for 1% risk. We will only be doing a 0.5 risk, okay? So this is just kind of the risk management side of things. You don't always have to risk 1%, okay? If the setup is still valid, because keep in mind, we're never taking a invalid setup. But if the setup is just a little bit less quality than the A+ setup and it is just an A setup, then I'm willing to take it, but just with decreased risk. So from this point on, we want to take a sell. Let's see. Okay, that's also a take profit straight into the imbalance. You see, at that entire time, that's why it's important that you need to look out for this specific timing. You can catch high probability setups if they align with an imbalance that has previously been created. So great, we're going to remove everything and basically just go on to the next day. So I'm gonna just go into the 4-hour time frame just so it's a little bit faster. We're going to be skipping all of that crap. So there we go. This is going to be 7 a.m. Let's go into the 15-minute time frame. Exactly. Okay. From this point on, let's see what can we do. Now, what can I already see right from the start is that we're having basically all of that stuff, right? Which is going to be what? A BPR. Now the question is, do we want to trade into it or do we want to wait? Because right now we are past 8 a.m. Everything that happens in here is past 8 a.m. Or do we just wait until we create a BPR, something like this, and then trade into it? In that case, once again, I would rather much prefer waiting this out instead of just jumping on a trade. Now, once again, the problem is you're looking too much into the future. You're trying to predict the first, the second, the third, the fourth step, and whatnot of the market. What you really just want to look out for is open your eyes, man. Here's a clear BPR right in here. You want to take this exact BPR. Why? Because it's very close by. If this entire BPR would be the very only BPR that we can go for, well then no. We will just wait for the next one that has been created past the 8 a.m. candle. So just take notes. I know that it could be a lot of information. Just right from the start, rewind the video, keep taking notes, and you'll also be able to be successful in this. I want to take a trade onto the downside, and I actually want to mark out this entire BPR firstly. Let me put it like this, all the way to the left. And we're just going to base our entire take profit in here and just aim for 0.5% reward. Yeah, and I know you can barely see all of these little things there. I'm going to include that next time. So let me quickly go for that. We're going to be going for 1% risk, and you see we're also not taking a lot of pips this is just 5 pips stop loss and 2 pips take profit. It really doesn't take much because it's a scalping strategy for the most part. So we're going to be taking a short, and it's mostly also going to be a market order for that sense. So let's see, and that's a straight take profit hit. Now from that point on, there's not going to be any more trade opportunity. Maybe later, if we're going to be skipping it, we'll see if there's going to be another one, but so far there's none. Now the difference in here was because once again we have created another BPR, and well, we have traded onto the downside. Let's skip this further on to either the next day, or we're going to skip it unless we're going to get another setup. So it's also an important rule that I'm going to be mentioning right now. No, we're not really creating any imbalances that we like to look out for. So I wanted to mention that if the trade keeps on running, or if you're looking at the price action past 14 a.m. ish, then you just close the charts. Okay, you don't want to be looking that long into the charts either. If like in the first couple of hours you have not seen a setup, then that day is not going to bring you anything further. Now this is going to be a tricky one. A lot of you guys would now be saying, well, why don't we just take this onto the upside? Because if we're going to extend this entire FEG all the way to the bottom, you know, we could be trading onto the upside, right? This is most likely going to end up happening. We can even do a test position just to see, like, out of interest, if this is going to work out. But you're not supposed to trade, but you're not supposed to take this. The reason for that is very simple, because you're having this entire candle that has already fallen back into this BPR. This is the reason why we have not taken it from this point on lower, right? Even though this might as well would also be a take profit. So just imagine we would have taken this kind of position, right? And then it's going to be the stop loss. This is the SL. This is the TP. We would have also won, but it doesn't align with the setup, so you're not supposed to take it. So same scenario in here. This entire BPR is not as high quality, so we don't really like to trade onto the upside, okay? And yeah, from that point on, let me just do like a test position, just in case, to see if that would have been a take profit. Let me do the 0.5. Okay, there we go. Yeah, this would have been also a take profit. But once again, if you see this in the live markets, you'll be thinking, well, I should have taken this trade. This could have been X amount of money. No, don't think like this. You have to stay disciplined, man. So from here, we're just going to go to the next day. So that's going to be the 8 a.m. candle. Let me remove the entire trade panel. There we go. Now, we have created entire imbalance. Let's look at the broad overview. Not zoom out too much, just like what has recently happened. Okay, we have traded higher. I mean, I do also remember that we had an imbalance in here, but I guess it doesn't really matter for right now. What matters more is that we have this entire imbalance and potentially even one more being created. This candle will be looking at something like this. Now, this is not going to be enough as usual, so we're just going to be skipping it and see if we're going to get a BPR somewhere in here. And once again, it has to align with the direction that we are already going to, whether it's short term or long term. So as you can see, if you would have taken a short, then yes, this would have probably been a take profit, right? Because we're trading lower and lower, but it doesn't align with the strategy, so we don't take it. Now we have created an FEG. Maybe we're going to get, unfortunately, we have already traded into it. No BPR created so far. And well, yeah, from this point on, we're just past the entire trading time for that matter. And you see, we have actually created an imbalance, but once again, it's not the kind of imbalance that we like to trade into. So also no trade. And just like, by the way, I just want to show you how fast you can actually skip and how smooth it is to do that in TradeLens. If I would do the same thing in FX Replay, it would already be lagging, man. So let's go a little bit further. So there we go. Okay, quickly zooming out just to get the broad overview. What we can spot is, simple as that, this entire massive FEG. Now, granted, it has already been traded back into with all of these candles. But if you're going to zoom in closely, as you can see, there is a little bit of that has not been filled in yet. Now, this is what we like to call a dirty BPR. Now, don't look too much into it. We'll be discussing it in another video, but we still like to consider it, right? So we could still trade into that entire thing. And let's see if I get like a good momentum candle onto the upside, such as this one, right? So ideally you would have gotten in somewhere in this entire candle, but once again, that is before 8 a.m. so you can really take it. We want to stay realistic in here. So from here on, we need like a good candle. Now, this is not something that I like to see, simply because we traded onto the upside and I want to see like a big candle onto the upside, but not this big, right? So maybe something like this will be okay, but that's just way too big. However, it creates another opportunity for us. From this point on, you could basically do something like this and create your dirty BPR in that sense, because now we could still be trading onto the downside. But even for that, I need further confirmation. First of all, the FEG must be created. In theory, this entire candle could just 100% reverse on you. So the next candle could look something like this. Even though in that case, most of the times this is still going to end up in a take profit. Okay, but mind you, always want to stick to the rules. We need to see, okay, now the entire BPR has been born. I mean, keep in mind the dirty BPR, okay? To be honest, I'm not trusting this out of intuition, but it is still aligning with the entire strategy. I mean, I cannot see a faulty thing. It is just out of intuition. But also in the backtest, on the extensive backtest that I've done, I've also seen, well, you just have to stick to the entire rules. Even though sometimes, I know, it looks scary. It looks like, okay, man, this is not going to end up in a take profit. It is most of the time going to end up in a take profit. profit. So I'm just going to stick to the entire strategy and take it as it is. So we want to take a 1% risk, take the sell, and let's see how this goes. Okay, this was like pretty close, man. Way too close for comfort. We have already been stopped out on this entire candle, and potential reason for that would be, now I don't want to look too much into it, right? Because not every single trade is going to have like a valid reason on why it ended up in a loss, but probably because we have a bigger imbalance in here. This could be like a reason, but yeah, at the end of the day, take profit has been hit. That's all that we really care about. Okay, so let me quickly remove all of this, and let's either watch out for one more trade on this entire day or go to the next one. So let's see, are we going to get like clean imbalance anywhere? No. And also, if you're going to take this, okay, so we're past our trading time. If you're going to take this entire thing, draw it out. So one more time, you can basically just draw it an entire line where the price action was not efficient enough. Whether or not that was the reason why we are bouncing off from it, that's like a whole different story and a whole different question. But you could theoretically draw out an entire line and see the most inefficient area, which is, you know, somewhere around that area. So we're just going to be going on to the next one. But there we go. So what do we have in the making? So right now we are having basically this entire FVG, another one. These could be some imbalances that we like to trade into, but yeah, ideally I would like to have something internal, and there's clear reason for that. If you're going to look at this, yes, we are trading onto the upside and we're having this entire imbalance. However, what is this to you? This is just a consolidating phase. If you're in a consolidating phase, most of the times your take profit is going to get hit simply because of the nature of a negative risk reward. So the likelihood that our take profit is going to get hit while we are in this consolidating range is quite high. But let's just see what the market is going to give us from here. Now let me skip the candles and see. Still not creating a BPR, so this is just an FEG, keep that in mind. And preferably, once again, I would just shoot for this entire FEG. Also, if you're going to combine all of that, these are just going to be relatively lows, but not really feeling it. Well, actually this one has already taken out this low, so it's not a relatively low anymore. So let's just skip this. Okay, we have actually created a BPR right in here, and this actually is quite of a good setup. I would call this an A+ setup simply because we are having these entire imbalances. So usually you only really need one BPR aligning, but if you have more than one BPR aligning, so a triple, a quadruple BPR, or it's going to be some kind of other imbalance such as these FEGs they would like to trade into, well then it just becomes higher and higher quality. So from that point on, let me quickly check, have we taken this out? Yes, we have also taken out liquidity in here, so this is guaranteed a A+ setup. Keep in mind, A+ setups also fail, but usually they don't. So let's go. Take this as it is. It's going to be a 0.5 risk reward, and let's trade this onto the downside. Let me quickly pull up the trade panel. We're going to be going for 1% risk as usual and take it as it is. So let's see. Okay, this candle has not hit the take profit yet, so let's see the next one. Okay, so there we go. Now it's like a pretty clean trade, and let me quickly rewind all of the reasons why we want to take a trade. So the very first reason is going to be we're having an entire imbalance in here. Okay, so that's like the very first thing. The second thing is going to be, well, our usual thing that has been created, a BPR. The third thing is going to be, we have created an entire liquidity sweep in that sense. We have taken out liquidity. The relative highs are not a magnet onto the upside anymore. Now we are potentially dragging the price lower, basically to that BPR or even to previous liquidity. Now keep in mind, what happens after the take profit has been hit does not really matter, but out of interest, I just always like to look out for it, right? I like to study and really go into the trades to understand them. So these were basically the three reasons on why we have taken a trade onto the downside. And this is like just a very good setup to take. So yeah, from here, we're just going to look at the analytics, and keep in mind, we are going to extend this entire backtesting session more and more and more. So far, we have been achieving a 100% win rate. Keep in mind, guys, keep it realistic. It is not going to stay at a 100% win rate. It is just that week that has really worked out, but it's also nothing unusual having a 100% win rate over 1 or 2 weeks straight up. But I just wanted to tell you, keep in mind, it is not going to stay at 100%. Some trades were really just going for a couple of minutes, while others were going for a couple of hours, but in total, most trades are just going to be below 15 minutes in that sort of time period. And actually, if you would have just risked 4% on every single trade, phase 1 would have already been passed within just 1 week of trading this.